So we're doing job cost, and we are doing assignment 7.1 handout. Now this has 9 questions on it, but they really go fast. And for those of you who are not accountants, just bear with some of the journal entries. We'll get through them together, okay? So let's kind of stroll through this. This is probably new to you, so we'll go kind of slow, and we'll see what we come up with. First of all, what are the journal entries to record these transactions? Well, what they've done is they have bought materials to make backpacks. And as you know, the canvas is going to be a direct material, okay? And probably the thread is going to be in manufacturing overhead, because it can't be assigned to any one backpack, because it's all, you know, it's very difficult. But both of them were bought on account, and when it says it's bought on account, that means they went into an accounts payable. So it wants us to record the materials when it was purchased. So if we add these two together, and it goes into materials overhead, because those materials do make the backpack, it comes up to a total of $76,400, those two added together. Now that puts them in inventory. This increases accounts payable and says that they owe money for it. So now they're going to apply this to the work in process. And if the company had $35,000 at the beginning of the period, what is the ending balance? Okay, so that's the next one. So now what we're looking at is work in process, and it says materials requisitions, and that means material that has been taken out of the material inventory and put into production. So we're looking at $63,000 in canvas. Now that would be right into work in process, because we know that is a direct material. Then you have an entry here that says manufacturing overhead, and that's going to be for the thread, because the thread is very difficult to assign so much to each backpack. And that would mean we took out $63,450. So how much is it? How much did we take out of that $76,400? We took a total of $63,450 out. Now we began with $35,000. This is this R3, and we purchased $76,400. And how much did we use? We used $63,450. So how much is left? Well, if you add these two and subtract this, you're going to come up with a debit balance over here. Remember, this is credit, this is debit, $47,950. Now, does that make sense? That becomes important here. We had this, we purchased this, we used this, and this is the balance left. It's a typical calculation that you use in accounting and job costing all the time. Beginning, purchased, ending, how much did we use type thing. So that is number one. So you're always going to be looking at what goes in manufacturing overhead and what goes into work process. Let's do one more and see how you come out. Now this one's a little bit confusing too, so I'll hang with you on this one. They produce LCD touchscreens, and they report the following information on December 31st. They've got materials inventory. They started with $51,000 and removed $32,000. Work in process has a number of entries in it. This work in process was credited, and you'll see it went to finished goods. It looks like they sold $115,000 worth of the finished goods there. They've got manufacturing wages here and manufacturing overhead here. So, what do they want us to do with these numbers? What is the cost of the direct materials used? Well, here's your materials inventory. It says we took 32,000 out, but if I go to my work in process where it would have been debited, it only shows 29,500 for direct materials, because that's the first entry. That's why I said this is a little bit confusing. You kind of have to really know what they were doing. So your direct materials used was 29,500. So now, if you subtract that from the 32,000 they took out at that time, you'll find that it's 2,500, which was actually debited down in the manufacturing overhead, which would have been the indirect materials being used on that. Let's keep going, and they want direct labor and indirect labor. Now again, you kind of have to be very flexible with your thinking. We credited 71,000 here, okay? And that means that if I go to work in process where my direct labor would have went, it would have been the second entry. There was 60,000 in direct labor, and then you'll find down here the rest of that 71,000. There's 11,000 in manufacturing overhead. That's very confusing, and if you were doing this for yourself, you would know what those numbers were and why they were there. They would be marked, and you would have a journal entry to follow those. But you can see how the flow is what I'm really wanting you to see. It comes from here and gets allocated to here and flows through. Same thing with the manufacturing wages. It's flow through. If you look at number 3 now, and number 3 is wanting you to find manufacturing overhead. And you know manufacturing overhead by now is going to have indirect material, which are the nails, the glue, the stain. Depreciation on the saws, that's pretty well defined. That would be a manufacturing overhead. And what else do we have? You've got, there's some indirect manufacturing labor. That would be considered manufacturing overhead. Now those are the things that are directly related to manufacturing. A delivery truck would probably be considered selling. And assembly line wages, that would be a direct labor, right? So your manufacturing overhead is going to be the nails, depreciation, and the indirect labor. And I bet those add up to 66,500. Let's look at 4. 4 is kind of unique and kind of fun, I think. We're looking at job 303. It has direct materials of 470 and direct labor of 350. So, boy, you can plug and chug that real quick. Right? 470. Direct labor is 350. And they're saying manufacturing is 60% of the direct labor cost. Well, you know how to do that one. You just take 350 times that 60%, and you should have the correct number, and it should all add up to 1,030. This is a T account that shows manufacturing overhead. Now let me explain this. This is the actual overhead. This is the applied overhead. So they're asking you, what the heck's going on here? So what is the actual manufacturing overhead? Well, that's going to be this one here. That's what's been debited to it, or been accumulated. The allocated, this is what was applied. So what is the predetermined manufacturing overhead rate as a percent of direct labor costs if the direct labor costs were 170,000? Well, the best way to do that, okay, you're dealing with this number and this number. What do I multiply times that 170,000 to come up with 215,000? And the best way to calculate that is what? Divide 250,000 by 170,000 and come up with a percentage. Number 4. It says, is the manufacturing overhead underallocated or overallocated, and by how much? Well, what do you think? We actually used 199 and we applied 215, so that's probably overallocated by 16,000. Now, the question becomes, what does that do to the cost of goods sold? This has been applied to the cost of goods sold. It's 215,000. It's really 199,000. So is cost of goods sold too high or too low? You decide. And then there's one more question related to that number 5 up there. They want to know how to close out that manufacturing overhead. And that amount is going to be, if my cost of goods sold has too much in it, I'm going to credit it, and then I'm going to debit the manufacturing overhead. How about the doggies there? Seem to think they're trying to protect the house. So let's go down and let's look at number 7. And number 7 is getting really complicated here. Probably your eyes are swimming right now. So let's take a break, okay? And I'll put this on another video so that it's not so long for you.